Bitcoin hits seller wall at $79,400 after Iran rally stalls. Bitcoin pulled back from a 12-week high in early Monday trading after running into a wall of sell orders near $79,400, CoinDesk reported. As of April 27, 2026, BTC traded at $77,826, down 0.24% on the day, but still up 4.77% over the past week, according to live CoinMarketCap data. The rejection ends a multi-day push that started when Iran's foreign minister flew to Moscow over the weekend to seek Russian backing in the country's two-month war with the United States. And President Trump said Iran could telephone if it wants to negotiate. That mix of escalation and back-channel signaling sent traders into hard assets, and Bitcoin caught a meaningful share of the bid. What the $79,400 level represents, CoinDesk flagged $79,400 as the level where the rally lost steam, and the order book behavior matched a textbook supply zone. Bitcoin spent most of February and March consolidating in a range capped near that price, so the wall is not arbitrary. It is the level where holders who bought the previous breakdown are getting their money back, and a slice of them are taking the exit. For context, the broader market is reflecting the same hesitation. ETH sat at $325, down 0.14% on the day, up 2.4% on the week. SOL at $85.98, down 0.53% on the day. XRP at 1.42, and BNB at 629. The Crypto Fear and Greed Index printed 44 in neutral territory. Risk appetite is present but cautious, and the cross-asset move underlines that no single coin is leading the tape higher. The Iran bid was always conditional. The rally's underlying story is a geopolitical premium, not a structural demand shift. Bitcoin tends to catch a flight to something bid when the dollar liquidity outlook gets uncertain, or when sanctions politics put friction on traditional rails. With Iran's foreign minister in Russia and Trump's negotiation door technically open, the trade was reasonable. The problem is that the same setup can cool in hours. A single phone call or a sharper Trump statement could push the narrative either direction, and the rally was light on confirming flow. Spot demand has been negative for weeks, as CryptoQuant's Ki Young-ju recently argued, with most of the bid coming from futures positioning rather than fresh capital. That makes any rally vulnerable to the kind of supply wall Bitcoin just hit. ETF flows tell a similar story of bifurcation. Friday's tape showed a 9-day inflow streak with $2.12B added on the day, but the prior week saw 1.9B in net outflows led by BlackRock. Institutional positioning is choppy, and choppy positioning does not break technical ceilings. What to watch next? 3 things will decide whether $79,400 holds as resistance or gives way. The Iran-Russia track. If Tehran and Moscow announce concrete coordination, the geopolitical bid extends. If Trump and Iran open formal talks, the bid evaporates and the rally unwinds quickly. Spot versus derivatives flow. Another wave driven by perpetual futures funding, without spot following, will run into the same wall. A genuine shift requires net spot accumulation, which the on-chain data has not shown for several weeks. U.S. session continuation. Asian and European desks did most of the work, pushing BTC to $79,400. If New York opens and the bid does not refresh, the pullback turns into a flush. For now, the price is holding above $77,000, which keeps the weekly trend intact. A close back below $76,500 would suggest the Iran rally is finished, and the next move is range-bound consolidation rather than continuation.